At some point, almost everyone hears the same advice. Just write off your travels, or worse, turn your vacation into a business trip. That's why business travel feels confusing, not because the rule is complicated, but because it's usually explained backwards. Business travel does lower tax, but only when the trip exists for business first. This move is about understanding that line. Travel isn't deductible because it looks productive. It's deductible because the business requires movement. When travel exists for business reason, the tax code treats the cost differently. When travel exists for personal reason, no amount of justification fixes it. That distinction is everything. In this video, I will show you how business travel actually works under the code, what qualifies, what doesn't, and how legitimate business movement turns travel into a real deduction without playing games. Travel is deductible only when the primary purpose is business, not vibes, not intent, not Instagram captions, not optics. The IRS looks at why the trip exists, how your time is spent, what business activity occurred. This is where people screw it up. Let's say you run a business, you fly to San Diego for a client meeting, conferences, content creation, vendor meeting. If the majority of your days are business days, airfare is deductible, hotel is deductible, transportation is deductible, meals are partially deductible. That's not aggressive, that's not elective, that's how the code is written. IRC 162, ordinary and necessary expense. This is where people get wrecked. Here's a mistake. They start with a vacation and they try to force a business into it. That's backwards. People who do this correctly, they start with a business, then they enjoy the location. Same destination, very different tax result. Let's say you have 3 legitimate business trips per year. Each trip costs $600 flight, $1,200 hotel, $400 transportation, $300 meal, 50% deductible. That's about $2,500 per trip. Times 3, that's about $7,500 at 30% combined tax rate. That's roughly $2,250 less tax per year. So what does not work? This does not mean that bringing your laptop on vacation or answering emails by the pool or taking one meeting and calling it business makes it business. Business travel works when business is the reason you're there, not the excuse. Business travel compounds. It supports your home office, your vehicle deduction, expansions, meeting, content. That's why sequence matter. Next up, move 6 is going to be your car. Is it a tool or all the trigger?